We are all about the early retirement movement on this channel. There are a few better ways to retire early than investing in the big boss. Some of the best ways to retire early include passive income from investments, starting a business that requires little time commitment, or renting out your property. Investing in growth stocks, such as Elon Musk's Tesla electric vehicle company, is an excellent way to generate passive income. We're all familiar with the computation by this point. From a $1,000 investment in Tesla in 2011 would be worth $240,000 now. As is commonly stated, let's aim a little further away than we typically do after 10 years from 2011. How about we decide on 2031 as our reasonable goal? In order to retire then, how many Tesla shares would we need? In order to learn more, when and where should you invest your savings? Continue viewing after subscribing. FIRE represents money self-reliance. Retiring early is becoming more and more popular with those who want to do so much sooner than ADA. Given their present income and standard of living, most people would assume that they will be financially independent by the time they retire. FIRE was inspired by Vicki Robin and Joe Dominguez's best-selling book Your Money or Your Life. Because of societal changes, the book urged readers to calculate the amount of hours needed to pay for each item. Nowadays, fewer people choose to work for decades apart from pension assets. How might this issue be resolved? Most of the time, retiring comfortably is an illusion since so few individuals can truly make it work. A FIRE believer invests more in their future than the typical individual does. To put money aside for investments, especially in a future-oriented company like Tesla, you should start early. This will help you accumulate retirement savings that will eventually be able to secure your financial future. Other than pension funds, what other solutions are there for this issue? To purchase Tesla shares in 2031, just raise your savings rate. Because of the COVID-19 retirement wave, an estimated 3 million more people have reached retirement age. Keep in mind that inflation rates in 2021 and 2022 alone were over 8%, the highest in decades. While this is significantly higher than historical averages, you at least need to factor in an annual inflation of roughly 2%, which is where investing in compound interest comes into play. Despite only being 20 years old, this is the delight of investing and forgetting about inflation for a time. Tesla is now the industry leader in opening the door for a more sustainable future and drawing a sizable number of enthusiastic investors. The stock's steady drop appears to have stopped, suggesting that it might be a wise investment for certain people, though not everyone. It is not a good idea to put all your eggs in one basket, so to speak, as this raises the likelihood that you may lose a sizable amount of your investment in a single company or industry. Although you should never risk your life savings in this way, the price of Tesla shares is another element that will limit how much you can spend. At the present market price of around $200 per share, investors with a few $100s or less cannot afford to purchase an entire share. Fractional shares would be a superior alternative, notwithstanding potential difficulties. It's important to remember that not every broker will make it easier to buy fractional shares of Tesla. The long-term prospects of the corporation must also be taken into account. According to the 2017 study, equities outperform treasury bills. Maintaining your money can be achieved by sticking to wise investing decisions. Compared to government bonds, the stock market has performed better. We discover that 52% of stocks end up in the red. Hendrik Bessemer of Arizona State University calculates that more than 26,000 companies declared bankruptcy between 1926 and 2016. Despite the uncertain future of the firm, we think it is a smart investment to own Tesla. Tesla's record sales profit and cash flow gains in 2020, 2021, and later in 2022 have led the company to prioritize safety and quality as core brand attributes. By the end of the year, Tesla had $24.6 billion in debt and $7.7 billion in cash. By 2025, the company is expected to have $24.6 billion in net cash. Based on the current market price of a coin, early investors may become extremely wealthy if Tesla is able to meet its ambitions of boosting annual deliveries by 41% from 500,000 in 2020 to 4 million in 2026. Due to growing economies of scale and greater average selling prices, analysts project that by 2031, Tesla will rank among the most profitable automakers in the world. Regarding the $2,500 price tag, which is 287% more than the stock's current worth, what are other investors thinking? Finance specialists, nearly all of them proponents of buying in the bull market, are venturing into unfamiliar area. which has led to a page about diversification. Conservatives recoil as a former Google employee and fan of ardent Tesla hurried to social media to reveal his unexpected money. Despite the fact that investing in Tesla is still risky, as stated in a blog post, Tesla bulls express optimism about the company's future. I would never, ever risk everything on one investment that has the potential to soar, they said. By spreading my bets, I can't possibly lose money with an average cost basis of $58. The Bolt is the owner of 14,850 Tesla stock. He thinks that the 2,500 shares he purchased in 2013 for 7.50 cents each are now worth $2.2 million. Perhaps 50 years from now, there won't be another Tesla. One of the most crucial aspects of retirement planning is figuring out how much money is needed to retire. The answer will ultimately depend on your salary and retirement goals, as well as how many Tesla shares are required for retirement. If you are aware of the suggested savings rate for your group, you can make more informed retirement plans. Even while it's simpler to propose a figure based on your age, the reality is that you probably have very different retirement savings objectives than your siblings, neighbors, or even coworkers. Most authorities concur that a variety of factors, most notably your lifestyle choices, define your specific requirements. For instance, if you make $100,000 before you leave from work, you will need at least $80,000 annually in retirement. Before retiring, you should have saved at least 25 times your yearly expenses, $1.25 million in savings to cover an annual cost of $50,000 to the Tunisian government, not counting inflation or stock appreciation. You can obtain $100,000 for $2.5 million. At the very least, internet retirement calculators indicate that you need to save roughly 25 times your annual income to comfortably retire. If you were to set aside 20% of your income annually and assume that your assets would yield 5 to 7% after inflation, it would take you 37 years to retire in 2031. If you set aside 25% of your income for savings, it would take 31 years. How then can we make this happen? Last but not least, spread your bets. If you already have investments in other automakers or renewable energy firms, you may be able to benefit from their growth, while also adding Tesla to your portfolio to spread out the influence of any one industry on your savings. Approximately, how many Tesla shirts do you have everyone retires in 2031? There is no magic number of Tesla shares one must purchase through it carry comfortably. However, you may use these methods we've shown in the video to compute a personalized amount that would vary person to person depending on their background, salary, projected lifestyle, and so on. How many will you require? And please leave a comment below. We'd be interested in hearing what you think. If you enjoyed the video, please remember to subscribe. I'll see you in the next one.